Hi, I'm Paul Sidlansky, and welcome to episode 11 of The Build, our 24-part planning series where we take you through the process of planning with Lake Road Advisors. In today's episode, we're going to talk about life insurance, and this is something that's extremely important for many, especially those with young families and young children. To start out, life insurance, in our view, is not an investment. Just like you would get auto insurance or home insurance, this is insurance to protect you in case something really bad happens. So in our view, we do not like to think of life insurance as an investment or something we're trying to get a return on. That's why we mostly recommend something called term insurance. Term insurance is insurance over a set period of time, and if you don't use that insurance during that time, it lapses. So there's no cash buildup and there's no amount of dollars that are returned to you. The benefit of this for younger families is that you can get a large amount of coverage for generally a low price. And so when it comes to term life insurance, whether it's 10, 20, 30-year term, this is going to be less expensive and it's going to allow you to provide coverage for your family at a really reasonable price. Now that we know that we really like term insurance for our mid-career professional families with young children, the next question is how much? What we'll say first is that this is not an income replacement dollar amount. You are not trying to make up for the lost salary of a spouse who passes away. What you are trying to do is protect yourself against emergencies and pay for big liabilities, both current and future. The most popular things that people are going to be covering for are mortgage, future college loans, maybe current student debt. Those are the types of things you want to think about. Again, this is not meant to replace income. It's meant to cover large liabilities or future liabilities. Take a look at your own balance sheet and more specifically your own liabilities. How much is your mortgage? How much do you owe on student loans? How much do you think you would need for college education for 1, 2, or 3 kids? Also, you may want to have some money aside for the surviving spouse to be able to take some time off and figure out what the next steps are in their life, where they want to live, what they want to do. But by having that ability to have that cash, which from a life insurance policy, that's tax-free money, and allow the surviving spouse to make a decision and decide, not have to rush and go back to work, you're really helping make an awful time just a little bit easier by planning ahead and having appropriate coverage. If you have any questions about building a financial plan and protecting your family, please reach out. We'd be happy to help. If not, we look forward to seeing you on our next episode of The Build.